Hello, I'm Ward Brown, and today we're going to do something a little different than we have in the prior videos and give you a quick look over our shoulder as we kick off September and, pretty hard to believe, get into the end of 2022. Now, Chairman Powell came out and basically in no way, shape, or form said that there was any thought that they were, quote, pivoting away from their effort to get prices and inflation under control, that was not the case. And so you should fully expect at their meeting coming up here in a couple of weeks that rates are going to get raised again. The only question is how much, 50 or 75 basis points. And they were going to continue the effort to shrink their balance sheet, which basically is their effort to de-stimulate the economy. Rather than put money and liquidity out into it to get people to spend and the economy to grow, they wanted to cool off and they wanted to show up in lower prices. Now, the good news is we are starting to see it in some of the data. Used car prices and gasoline are two big components of the CPI, or Consumer Price Index, which is a oft-used measure of inflation. And you can see both of these are rolling over. Gasoline prices, especially, that was pretty painful up here a couple months ago, starting to come back down to earth and given back all of the run after Russia invaded Ukraine. But on the other side of the coin, we have some things like rent, cost of living, and that continues to go the wrong way. And the Fed wants to see several months where they're not only seeing slowing, but getting back into a range where they see inflation more reasonable, and they're going to continue pressing the gas until they get it. And that's showing up in a slowing economy. Here is an oft-used look at the industrial economy. This is the ISM manufacturing survey. And as you can see here, this is activity in white and new orders in yellow. And the industrial economy is slowing, and that's what the Fed wants. You're also seeing it in the housing market. This is a look at existing home sales. This looks the same. New home sales. The housing market is slowing down. Now, we don't think it's falling apart. Yes, there's still some adjustments out of the weirdness that was COVID, and yes, adjusting to much higher than we've had mortgage rates. But the housing market, while slowing, in our opinion, is not falling apart. And here's some good news, and that is if the bottom was really falling out economically, you'd expect to see that showing up in the estimates for company earnings, and we're just not getting that. Right, here's a look at the earnings at the estimates for earnings and sales for the S&P 500, and they've been remarkably resilient. And so right now you're getting what is always, of course, a look at the scale, good, bad, or indifferent, but it's pretty balanced right now. And so if you take a peek at valuation of the S&P 500, this is a look at the price to earnings ratio going back 25 years. And this blue line is the median or average. And as you can see, we are right at it. And that makes sense because the market's really weighing both the good, bad, and different of a tighter Fed. Don't fight the Fed has a lot of teeth. And on the other hand, a remarkably resilient economy. We have a good labor market, earnings estimates holding up. And so what do we think as we go into the end of the year? Well, midterm year is usually pretty tough, right? The first 9 months especially, we're right in this window in yellow here on the screen. And September is historically also a tough month. But towards the end of the year, you can see we have had some pretty good runs out of it. And that makes sense too. Just historically, you get clarity politically coming out of a midterm election. And in 2022, there is still the potential when you take a look at something like company earnings for that soft landing scenario where the Fed can try to get a handle on inflation and prices under control, but doing it without really breaking the back of the economy, company earnings and stock prices. And so, yes, we understand the look at the cautionary side of the coin there, but we also think that potentially optimistic bent also makes sense. And so as we move out into the end of the year, we maintain a cautiously optimistic look. And thanks a lot for watching, and we'll see you again soon.